Hey everybody, Smart Silver Stacker here. Hope you're doing well. So today is, in fact, a day that will likely go down in history in the silver market. Now, how this will be viewed from the future, I guess it depends on how things are going to play out here moving forward. But I'll give you my best analysis of this situation. And you know, sometimes when I title a video something like Silver Price Smash or Silver Price Crash, there are those who will tell me in the comments that I'm being hyperbolic with that statement. Well, not today. Today, the silver price really got smashed, down 25%. This is probably a record decline in silver, definitely in dollar terms. I mean, silver is down $30 today. Silver was at $30 for so long that in some ways my brain still kind of pegs its price there. Today, we're down $30, down more than 25% in a single trading session. So, should you be concerned? Well, obviously, if you see a quarter of the value or the paper price of an asset that you're holding, at least you should be taking a look at this and, considering the implications. But I'm going to give you my take and tell you what I did today. So first of all, let me show you this post that I put up on X a few hours ago. Now, at that time, silver was still at $94. But I think everything I said in this post holds true, except maybe this trend line, which we'll take a look at in just a moment. But I wrote, drawdowns are the cost of upside. If you want asymmetric returns, you have to accept asymmetric volatility. You don't get 100% plus moves without 20 to 30% pullbacks along the way. And keep in mind, last year alone, silver up 147% on the year. These are the same phenomenon, just viewed from different time frames or, viewed through different lenses. Nothing meaningful about the silver thesis has changed here. The macro backdrop is intact. Structural uptrend is intact, and this kind of violent price action is exactly what real bull markets look like under leverage and thin liquidity. Volatility isn't risk, it's the admission fee. If you like silver at $121, you should like it even more under $100, and I will say even under $90, I think you should still like silver even more. As stackers, I mean, if you thought you had missed out on double-digit silver, like you were never going to be able to get some silver under $100 again, well, here's your chance. It's not financial advice. I don't tell anybody what to do. I will say I have added to silver positions and silver miner positions on this drop. Let me know in the chat. Leave a comment if you're watching this later what you did today on the dip. I hope you didn't sell, but maybe you got to sell. Maybe that's the move for you. I can't tell individuals what to do, but I mean, if you sold yesterday, I guess congratulations. Good job. You timed the market well. I will say in a recent video, I mentioned that there was a possibility of a correction. Now, I didn't foresee that it would be this steep. It's a huge move in one day, but I had opened up some paper hedges on silver. I closed those today. Now, they didn't entirely offset the losses on my paper portfolio, but they did help, right? So that's kind of what hedges are for. If you want to buy today's dip, if you want to get your hands on some physical metal, it's certainly cheaper today than it was yesterday by quite a margin. Then check this out. SD Bullion, trusted by hundreds of thousands of customers, A+ rated by the BBB, home of the Scottsdale Mint Eagle Stacker Silver Round, precision crafted, interlocking in multiple sizes. Visit sdbullion.com where America buys physical gold and silver. All right, so you want to get some silver today on sale, you can go over there. Now, I had drawn that trend line on that post on X, and as you'll notice, we've actually penetrated that trend line, right? This is from here around the breakout from the big cup and handle pattern, which we'll take a look at in a moment. And we have penetrated that. It's only 1 o'clock though, so there is a real possibility that silver could close above this trend line if we get a bounce, and it looks like we are getting a bit of a bounce off the lows. So that would be a good technical development if we could close above this trend line. That would show that that trend line is still intact. But what does seem to be holding is if we draw a Fibonacci retracement about the 50% retracement level. That looks like that's support. Silver bounced pretty strongly off of that level. I would say this correction could worsen, right? Previous bull markets like 2011, along the run in the early 2000s, up until that $50 high in 2011, there were some significant pullbacks, right? I think somewhere as much as like 30%. So we're kind of approaching that now. But I would say even if this pullback worsens, where I would look for it to end would be here at the 0.618 retracement, $76. If that support doesn't hold, it could be lookout below. I mean, anything could happen, right? It could drop back down to $50. There would be a lot of very strong support at 50. If we did that, that would be the buying opportunity of a lifetime, I think. I don't really anticipate that happening, though. And I suspect that, we may be putting in the lows right now around, where did we bottom out here? Around 84.40. We may be at the lows right now. That's what I think is happening. Anything could happen, especially in the short term, right? As I mentioned, I added to some silver positions today. If it drops down to 76, I'll add more. If it drops down to 50, I'll add more. That's just what I'm doing. I can't tell you, what to do, but I think there's a lot of factors which we can kind of cover here that support the silver bull market not being over. First of all, let's zoom out a little bit, right? Let's decrease the resolution. Yeah, and I see someone in the chat there saying, what caused the dip? I'll get to that in just a moment. Part of what caused the dip was the fact that from a technical standpoint, silver was extremely overbought, right? I mean, it's gone parabolic. It's gone exponentially up. That 121, apparently it was a blow off top. We talked about that possibility in recent live streams. Now, I, was skeptical of a major correction like this, but that's what we got, right? And from a technical standpoint, under normal circumstances, that's what you would expect when something goes straight up. Nothing goes straight up forever. Gets very overbought. There's a lot of profit taking. I do think that there could be some, manipulation going on here. However, I hesitate to label the cause as that without evidence because, look, when silver's going up 10% a day, everybody just thinks it's normal and is, pleased as punch. But then when it gets smacked down, they say, oh, it's manipulation. So there's sort of this knee-jerk reaction to say a big drop. It must be manipulation. It's probably what happened. It's a cleansing. There was a lot of leverage in the market. There were late buyers with leverage, and the selling triggered their stops, or someone got margin called, right? And you get this cascading sale. That could be manipulation in the sense that some big players drop some big contracts to hunt for the stops. And what I mean by that is that when traders put in stop orders, it's like a stop loss. It says if the asset drops below this level, then sell. Well, you can kind of see on the books, of trades where those levels are. And if you can get the level, the price level to that point, then all those sell orders are going to hit and the price is going to drop even further. So we're seeing a cleansing here, a flushing out of leverage. But this is a monthly chart. And the reason we're looking at this is one, you got this big cup and handle pattern we've been talking about for some time, which is a hugely bullish pattern for silver. It broke out of this at the end of 2025. And this is probably the biggest reason, this chart right here, why I don't think that we're done, because this is a 46-year base. Seems extremely unlikely that would wrap itself up in a blow-off top that takes, 2 or 3 months. No, this is a bull market that's going to continue for years, especially when you look at the fundamentals. And look, now we're at 82, so we are seeing that 50% retracement getting tested here. Maybe it will go to the 0.618. Could be $76. I mean, boy, what an opportunity is how I look at that. And, I'm in the red today, but I'm still way up on the year. So are you if you were buying around the time I was. It's nothing to worry about. The number of ounces in your stack are the same. Now, if you got wiped out because you were using leverage or something like that, margin, that's you got to be careful in silver. You got to be careful. Silver takes the stairs up, but the elevator down. It kind of took the escalator up. I would say it was a fast move up, but as you can see, the declines are just murderous in the silver market. And I've mentioned that many times. Anybody who's followed the silver market for a long time is aware of this fact. But again, the monthly chart. Look, we're still green on the month. That's pretty incredible. Silver is down 28.55%. It's January 30th, and we're still up 15% in January. That should give you an idea of why silver needed to correct here, right? We were up, 50%, I think, in the month of January. Now, silver is undervalued, I think, especially now after this correction. But again, nothing goes up that fast, or some things I guess could go up that fast and keep going up, because that's what everybody said when silver hit 90, right? It's overbought. When it hit 100, oh, it's overbought. When it's 110, overbought. So it got to 120. But, you know, things have to correct at some point. Now, I have been talking a lot about this chart. This is the M2 to silver ratio chart. And I mean, for weeks, I've been saying that there would be resistance at the 120 level. That was the real level to look out for. We blew through 100 easily. This was the real level that we needed to watch out for. Well, now we got our reaction, right? That's what happened. The $120, $121, kind of the high that we put in. You can see this, we came very close to touching this green line. That is, in fact, the inflation-adjusted 2011 high, not using the CPI or any other government inflation metrics, but just looking at the currency supply. Adjusting for the currency supply, $121 silver is equivalent to 2011, $50. Shows you how much currency has been created. Also shows you how much the CPI understates real inflation, because the CPI says the inflation adjusted price is like, I don't know, 70 something dollars, I think. But I think today's action kind of shows that this is a very important technical level, and you know, we saw the reaction. So also, this is something to keep in mind. We're likely, you know, we're gonna correct here. We've already corrected, right? We might chop sideways for a little bit. We might get a rapid bounce back. I'm betting on kind of a rapid bounce back over the course of the coming weeks, and I'll kind of go over why here as we get going. And I've said that for a while too, that any drops in this silver market could be drastic, but they will likely be short-lived. So, you know, I'll probably add to more positions here to the extent that I have cash. I mean, I still have a little dry powder. I put a lot of it to work today, though. And I expect that to, you know, pay off in the coming months and years. But, you know, again, let me know what you did in the comments. I think this is a huge sale, right? Gold, too. I mean, it's not just silver, by the way. Let's look at the gold chart real quick. Gold, if we go to the daily, look at that. Gold is down 10% today, almost 11%. Now, you might recall I had mentioned in a recent live stream when we were discussing the potential for a correction. Now, and to be fair, I'm not saying I called for this, right? If I had known there was going to be a big correction today, I'd be making a ton of money, right? Because I would have bought a bunch of short-term put options and I'd be rich. But look, I didn't do that because while this was a possibility, I didn't see it as being the most probable thing, but anything can always happen. But I had mentioned that the gold price might retest this breakout trend line right here. So gold broke out here on January 16th, 2 weeks ago, not very long ago, had this huge run up from about $4,600, topped out at just around 5,600, 55.98. And now it's coming crashing back down today. Well, this is actually really bullish for gold. If we do retest this level around 4,600, that will be an incredible level to, you know, bounce, because what you're getting here is a breakout from consolidation, then a retest. And what that does is it sets you up for the real move higher, which will take us past $5,600 to new record all-time highs. And, you know, it's difficult to put a time frame on this, but I would say by, you know, mid-year, we'll be putting in new record highs in gold. And it could be a lot sooner than that. It could be in February. I mean, anything could happen in these markets. What else? I haven't even looked at these charts. Okay, platinum chart looking a little rough here. Platinum it broke out of this consolidation, went on to, you know, make new record all-time highs, and now it's tanking. It's broken support here, clearly. But platinum is such a small market. It's down 18% today. Platinum moves really sharply to the downside when it does. You can see here, like in the end of December, we had this down 13% in one day. And, you know, this is going to be something that you continue to see as we experience the death throes of the fiat currency system. Massive volatility. Okay, massive volatility is going to be the name of the game. And if you can keep your wits about you and not get overly emotional and, you know, frightened when you see these things, then you can really turn this volatility to your advantage. This is the kind of day I like to buy, and I have been buying. I like to buy things when they're cheap. Look, I'm a value investor at heart. When you've had a run like silver's up 147% last year, up 50% in January, you're going to have to give something back at some point. And I suspect that there's a lot of cash now that's sitting on the sideline that's just saying, when does this end? Because I want to get in before the next run up. Oh, silver in the 70s now. Okay, so the fun part about doing a live stream is you get to watch the silver price crash in real time. So let's let's draw our Fibonacci here again. Yeah, so you can see we've penetrated the 50% drawdown. 76 bucks. We're getting close to that. That's probably going to be the bottom. I'd say if I had to assign a probability, that's probably going to be it. Now, if there's no support there, yeah, it could go all the way to 50. 50 is where the breakout took place, and the breakout from 50, that was only in November. It wasn't that long ago, right? That was the breakout from the big 26-year cup and handle. And just like gold could retest its breakout, and then that'll set it up for a huge move, if silver retests 50, look, I can't tell anybody what to do. I'm coming in as much as I can, you know. It might be like mortgage the house time. Probably not, because I'm a little more conservative than that, but, you know, that's just the feeling I would have with $50 silver. Like, I never thought I would see it again. I'm glad I did. I did, if it happens. Probably not going to happen, though. I think we're going to stop here around 76. Okay. Now, let's get into some other news and what's kind of driving this. First of all, I just want to look at what's happening in China to kind of coincide with the crash, the drawdown that we're seeing here. This is the most recent data from the Shanghai Gold Exchange. So it finished around 23,516 Chinese yuan. So right here, I've got the calculation for 23,600 yuan, close enough. That's $3,396 per kilo. If you do the math, that comes out to about $105 per troy ounce. So silver's still over $100 in Shanghai. And think about that. Think about how wide the margin is right now. It's almost, $26 margin premium between U.S. prices and the Shanghai price. Shanghai at 105, U.S. at 78. That's a huge premium. Now, to be fair, maybe when I think Shanghai might be closed at the moment. But when it reopens, maybe it'll crash, maybe it'll decline, right? But as long as those premiums remain intact, that's kind of the weapon. I think what's going on here, and I'm going to kind of outline things for you a little bit. We have a lot more to cover, by the way. But I think what's going on with the China silver thing, I have a theory. So the recent attacks that the U.S. Deposing Maduro in Venezuela, right, cutting off Venezuelan oil both to Cuba but also to China. China was a big buyer of Venezuelan oil. Look at what might happen over the weekend. We've got the conflict with Iran. Guess who is a big buyer of Iranian sanctioned oil? Well, China is, right? This is aimed at China, this energy warfare. And what you're watching is a global scramble for strategic resources, silver and also petroleum. Petroleum, I think the most important strategic resource of the 20th century. Silver could potentially be the most important strategic resource of the 21st century as we build, massive scale AI and increased electrification, data centers, power grid updating, all of the conflict of the 21st century is going to be centered around these new technologies, and silver is critical for all of them. But I think what's happening is China is bidding up the price of silver. They're hoarding the stuff to drain Western stockpiles of this critical mineral, because if you get these huge premiums, right, like a $30 premium almost of Shanghai silver over COMEX, that's going to trigger arbitrage, a flight of silver, physical metal, not paper contracts, but real actual physical metal from west to east, from the U.S. and Europe to China. And I think that that's what we're witnessing here, right? We're witnessing the World War III, the slow cooking World War III that we've been seeing for years. It's going to be a financial arena, a resource arena. That's where a lot of this conflict is going to be fought. It's not all going to be, drones and guns and bombs. And I think that is why we're seeing these huge premiums in Chinese silver. So silver is like a battleground of this conflict. Now, some of the kind of headline stuff that contributed to this decline, let's get into that. We had this PPI inflation number come out, the producer price index, and this is one that the Fed likes to keep an eye on. But this tends to front run consumer inflation because this is like wholesale inflation. And it came in significantly hotter than expected today. Came in at 3% against a 2.7% expectation. Core PPI was at 3.3, so that I believe that excludes food and energy. Higher than expected, 2.9%. So a hot inflation print. Shocking, I know. Very surprising that inflation would continue to rise. Considering the fact that the Fed just started printing money again in December, they've been cutting rates into record high gold and silver prices, record high stock valuations, elevated prices that are still remain elevated from the previous bout of inflation. So yeah, inflation's creeping back up, no surprise there. But what this does is it gives investors the narrative that the Fed's going to have to tighten up, right, to get inflation under control. So less easy money. So that's contributing to the sell-off in hard assets, gold and silver. It was a perfect setup, right, for a decline in silver. You had this massive overbought condition. You got a hot inflation number. That's what's going on, right? We also had this announcement of Kevin Warsh, who's a current Fed governor, I believe. He's going to be the new head of the Fed, the new chair. He's going to replace Powell. And, there may be some anticipation that he's going to somehow be like a hawkish candidate, I guess. I don't think that, this is a valid concern, but this announcement did come out today. It's a major announcement in regards to U.S. monetary policy and the Fed. And I think that this news, while in reality it's not a negative thing for gold and silver, that may be the, perception here. I want to go back to the silver chart because it's continuing to decline. We're now down 34%. I mean, this is absolutely incredible stuff. Remember, number of ounces that you're holding hasn't actually changed today. Let's see. Okay, so we're testing the 0.618 retracement. Now, let's switch this to an hourly chart so we can kind of get an idea of what's happening here as we watch this play out in real time. But you'll see it looks like the price is hovering right around that 0.618 retracement now. So that's going to be the line in the sand, I think. Looks like it's bouncing from there. We'll keep an eye on it as we go. Let's switch this even to let's go like 30 minutes for the sake of the live stream, because this isn't going to be hours. This is going to be, a little bit longer here. We'll stay live for a bit and kind of watch this happen. But it looks like we're getting a bid there. Looks like we're bouncing a bit. Well, we'll see how it plays out, right? Can't make this stuff up. Okay, here's another component that is contributing to the sell-off. We just had the CME raise silver margins. This went into effect after trading on Wednesday, so today's the second day. But, the correction kind of started yesterday. If you look at I hate to keep switching charts on you here, but if you look at the daily, you can see that the correction sort of began yesterday. It was a lot of range yesterday. And so that was the margin hike. The Wednesday was a nice day in silver, nice green candle. We had a red candle yesterday, albeit off the lows of the day, but that set us up for this sharp decline. So the CME raised margin, look, I mean, changing the rules can change the silver price in the short term, certainly. But you look at what's happening on the Shanghai Gold Exchange, and the CME and the COMEX at some point here are going to become irrelevant. Very, very strong potential for that. March is still, I don't have the open interest pulled up here, but the open interest I'm sure remains high, although maybe there's some selling there. Maybe there's a shrinking in the open interest. I think we won't see until the end of day, actually, to see what exactly happens there. But, March is still going to be an important month. There could be a lot of people standing for delivery, a lot of investors standing for delivery on the COMEX. They probably wanted to get the silver price under control before that happens, maybe head off the risk of that. But the fundamental picture here, it really hasn't changed, and the COMEX changing a margin requirement isn't going to fix that. This isn't 1980, right? This isn't the Hunt brothers. This is like the CCP bidding up the price of silver and creating arbitrage. This is not the Hunt brothers, right? The COMEX is not some all-powerful entity, and I've said this many times. I said this when people would see, the CME and their tomfoolery when silver was at $30 to $20 in that range, and people would say, well, the CME, the bankers, the COMEX, they're just going to suppress the price. And I said, look, they can't do it forever, and as long as they do it, say thanks, because you can buy the stuff cheaper, especially if you have a relatively long-term view of these markets. Silver, if you bought it then, you're still doing well, and I think if you buy it today, not financial advice, I can't tell you what to do, but I think you're not going to be sad about that decision over the coming months and years. Let's take a look back at the chart. Yeah, getting a nice bid there at the 0.618 retracement. Now, the reason that's important, 0.618, that's like the best Fibonacci retracement level, I guess. I mean, I don't understand the entire inner workings of how this works. It's based on the golden mean, but 0.618, that's where you tend to see a lot of support. You draw the Fibonacci from the bottom, the base where the run took off from, which is down here. You put it to the top, and then that 0.618 number based on the golden mean is where you tend to get support. And, a lot of these technicals, I don't bother. It's nice. I try to study them and understand how they work, and then I kind of forget that stuff and just heuristically learn how to use them, because that keeps you a lot more fleet on your feet, and you don't have to think about it too much. The 0.618, if that shows up as support, that's a good sign, right? And it looks like that's what's happening. We're getting a nice bid there. We're back up to $78. Let's see. This is still happening, by the way. Potential regional war in the Middle East could break out over the weekend. Just, a side note here, as silver and gold prices are crashing, Iran warns retaliation to U.S. attack will not be limited. This is from earlier today. I think this was from about an hour ago. Iran has threatened to instantly strike U.S. bases and aircraft carriers in response to any attack. What else are they going to do? Probably shut down the Strait of Hormuz, blocking 20% of global oil production. If that happens, they like to do this stuff over the weekends to limit the market impact, but we might be set up here to see one of the wildest swings in market history, let alone precious metal history, right? If we get this huge sell-off, like let's say we close around the current price, it's still early, it's 130. I think we're probably going to get a bounce. We touched this 0.618. I don't think we're going to close on the lows of the day. But whatever. We could close at $78. We closed down 30%. That's enough. That's a crushing correction in a single day. What if Monday we're up 30%, or you got to go up more than 30% to counteract down 30%, that's how the math of it works. But, if there's a strike on Iran, you could see a massive surge in the price of silver on Monday. Now, hopefully that doesn't happen. I'm not, hoping for a regional war to break out, but it's a risk that you can't ignore when you have the U.S. sailing a giant, armada of ships, in the words of our president, and look, it looks like the stage has been set for potential regime change. Part of the reason is the Iranian regime is viewed right now as being incredibly vulnerable because of the recent protests, etc. So, they might want to take their opportunity. And, one of the things that Trump said, supposedly this was all about these protesters and human rights and all that stuff. I mean, give me a break. As if we care about that in Iran. Then he comes out and says Iran better make a nuclear deal. So it's like, wait, I thought this was about humanitarian protest stuff, helping out the protesters. No, this is about getting regime change there, getting a friendly government there, getting a puppet there. And again, it's an attack on China, right? We cut off their Venezuelan oil. Now we want to cut off their Iranian oil. We're trying to turn up the temperature on China. They're doing the same thing to us with silver. So it's Resource Wars 2026. This is just getting started. Expect massive volatility and expect crazy stuff that will make your head spin and that nobody would forecast. This is going to be like the year of black swans. The fundamental picture, as I mentioned, has not really changed. Like I didn't check the debt clock today and suddenly it was going down. That would be something, right? Now, if I check the debt clock and I saw a news story that said Congress balances budget, president agrees to support a budget which cuts spending, and they're going to, raise taxes to get the debt under control, I would probably sell my silver if I saw that. I would say, well, they're gonna get it under control. They're gonna do it the right way. The price of silver is going down. The price of gold is going down. If I saw a story that said, U.S. and China and the BRICS nations agree, we're going to stick with the dollar system, and the U.S. is going to prevent the debasement of the world reserve currency, and we're also going to raise sanctions on everybody. No more sanctions, no more weaponizing the dollar. Everybody's back in SWIFT. I would sell my silver. If I saw those news stories, I would. That would probably be the thing that would make me sell my silver. And until I see that, I'm not selling my silver or my gold. Leave me a comment down below to let me know what you think. What would it take to get you to sell your silver or gold? For me, it would be those stories, the fundamental picture changing, or much, 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 much higher prices, right? Massively higher prices. for me to sell my gold and silver. We still got $38.6 trillion in debt. We still have a looming massive debt crisis, right? Federal government interest, Q3 2025, $1.2 trillion. Interest rates continue to rise. This is a huge problem. This means they're going to have to print huge amounts of money. This is why the Fed started buying U.S. Treasuries again in December. Guess what? That's going to go much higher. The Fed balance sheet here, you see that little tick up in December? It's actually kind of come down too. They ticked up and then looks like they haven't been buying too many Treasuries in January. That's going to change, right? When this guy Warsh gets in there, when Trump's guy gets in there, if he's getting picked to be the Fed chair, it's because he's a dove, right? He's going to be dovish. I don't know how we can guarantee that. I just know that if the president's putting this guy in there, the president wants much lower interest rates. He wants easy money policy. He wants a weaker dollar to help reshore manufacturing to the U.S., to boost U.S. exports, to shrink trade deficits. You got to get a weaker dollar to do that. And we're going to have a weaker dollar. So, the Fed is still going to be debasing the currency. They're still going to be monetizing a lot more debt than anybody is pricing into these markets right now. I think I'm pricing it in because I'm buying silver, right? But again, let me know what you think. The fundamental picture has not changed. We're still facing a massive debt crisis. The Fed's still on track to debase the dollar. Inflation is rising. This is the trade, right? Get into silver. And I view this drop as just such an incredible opportunity. I mean, who would have thought that you would be able to buy silver around these prices today? I believe SD Bullion still has, if they've got any in stock, they still have junk silver below spot right now. So, if you go buy today, you're probably going to have to wait a little while to get your order because I bet there's a lot of people taking advantage of this. But yeah, I'm checking it right now. They do still have it in stock. So, could be a buying opportunity. Just saying, it's an incredible thing that we're witnessing. But do me a favor, leave me a comment down below to let me know what you think about all of the various topics that we covered in today's live stream. What do you think of this historic drop? Are you panicking out? Are you just done with silver? Say, too much volatility. My heart can't take it. Am I going to sell? Or are you buying the dip? Let me know. A few things we didn't look at. The miners. Yeah, the miners are also getting crushed today. SILJ down 15%. SLJY, that's a ETF that holds the SILJ and it sells covered calls on it, generates some income. It's kind of nice. The dividend for this hit today. And so if you have the dividend reinvestment turned on, you got a bunch of shares at a lower price. But anyway, do me a favor, comment on the video, share this with your friends. Let them know, hey, if you thought you missed the opportunity to get cheap silver, it's not, necessarily cheap if you look at it year over year, but it's a lot cheaper than it was yesterday. Subscribe to me on X at x.com/stacksmarter. Subscribe to this channel. And thanks for watching, everybody. Looks like this is going to be a good time to buy silver this weekend. I guess it depends on where we close. But if we close anywhere near where we're at right now, there's going to be a sale all weekend. So I'm sure a lot of people are going to be doing some stacking. Thanks for watching, everybody. Stay safe and happy stacking. And I will catch you next time. Smart Silver Stacker out.